Now, this is a very simple debate and it's been going on for decades now, that which one is better? Is it technical analysis or is it fundamental analysis? To be honest with you, it's not even a comparison. One should not compare. One should understand what is technical analysis, what are its pros and cons, what is fundamental analysis, what are its pros and cons, and where do you stand in between these two, and then take a call. Should you use one of them or should you combine them? So come on, let's take a look at what are the key differences between technical analysis and fundamental analysis. To discuss and understand this difference, I will like to take you to my notepad. I'm going to sketch, I'm going to write something, and we're going to understand the key main differences. So here I am. Let me just put a vertical line, split the screen in two parts. On the left, let's talk about technical analysis. I'll say TA in short, should not be that difficult to understand, and FA for fundamental analysis. Okay. Now, first and foremost, in terms of technical analysis, your main input, the main data is price of the stock. On the other hand, when it comes to fundamental analysis, your main key data that you look forward is that of the company. That means you try to figure out the value. The main difference over here lies essentially that one is looking at the value, one is trying to figure out the value, and someone is trying to figure out the correct price. Let's start from the right hand side. Let's talk from the point of view of the fundamental analyst, researcher, who's trying to figure out the value of the company using company analysis. Now, what goes inside company analysis? What does he or she look at? We'll look at the balance sheet, the profit and loss numbers. You will do management meets, understand the company's valuations, probably meet the management, visit the industry, the factories also, and he or she, the researcher, the fundamental analyst, will come out with a valuation report that according to his findings, the correct price of that company's stock should be such and such. If in the market it is at a higher price, then it's expensive. If in the market it is trading at a lower price, then it's a buy because he thinks that the price should be higher. So that's a company analysis. And the data you're considering are quarterly results, the in-between announcements so they have to maintain everything and of course tweak it here and there whenever new announcements are made, and that's company analysis. Take a look at the left hand side, the technical analyst who is looking at the charts. We do take a look at the charts. What is our key parameter? Price. Price changes every second. Every day, the current market price is different. In a matter of just a week or two, the price can go up 20-30% or even crash 10-20-30%. A lot can happen in a very small span of time. And over here, the focus is not on the company. The focus is on the stock. Please understand with me here that there is a big difference between company and stock. You can have a very good company, which is not a very good stock. You can have a very bad company, which can be a very good stock. Now, to understand this, we can quickly take a look at the best example that comes to my mind right now as I make this video for you is that of Reliance Industries. And if I show you the monthly chart, the long-term charts of Reliance Industries, and if I take you back to this area, I don't know if you were even there in the markets during this zone or not. If you take a look at this area for Reliance Industries, this was like close to May 2009 to almost March 2017. You're talking about 7 to 8 years. And the stock, do you see, has it gone anywhere? If you had entered on this date and you're taken a look at the stock after 7-8 years, you would have been frustrated. I clearly remember this particular range, zone, period of underperformance from Reliance led to many institutions underplaying them. They used to reduce their holding on the company. But question mark, was this a bad company? There must be something happening, Jio and all those things, a lot of things were happening, understandable, but was it a bad company that it was underperforming like this? No, it was consolidating for a very, very long span of time, but probably it wasn't a bad company. But was it a bad stock? Yes, it was a bad stock. See, from a stock point of view, when you buy something, what do you expect? What do you want? Go up, right? So the company might be good, but if it doesn't go up, what can we do? The company can be horrible, but the stock moves 100%, fine. So that's a big difference we have to understand, that technical analysis focuses on price, not on the company. Fundamental analysis focuses on company. Now, from this point of view of price and company, from this point of view of the fundamental analyst looking at the balance sheets and the quarterly results, and the technical analyst is looking at charts and price data, I should discuss with you the second pointer, and that is the frequency of the data. How frequent is the analyst, is the researcher getting the data, and once he has the data, he has to analyze it. For a technical trader, the frequency of his data is super fast, is very, very fast. He is looking at the charts, it's changing every second, every minute, hour, day, daily, monthly, quarterly, right? On the other hand, if you take a look at the fundamental analyst, is essentially taking a look at the quarterly results, in between some announcements, the company, the way a company behaves, works. It doesn't change every day. It might change once in a quarter or once in a year or decade, depending on the management call. But they don't all of a sudden change overnight. Price changes overnight. So the data that you're analyzing, how frequently are you getting it, and how frequently it is required for you to analyze it. For technical analysis, it's very, very quick. The frequency is high. The fundamental analysis, the frequency is low. Because there's a difference in this frequency, both of us can clearly therefore say that technical analysis is more oriented towards short term, and fundamental analysis is by default oriented more towards long term. If you are a fundamental analyst and you analyze a company and you take a call and you say, no, this looks good, I should buy, and your data will only change after 3 months or 6 months, in between whatever happens to the price up and down, you should hold on to it, you should buy. On the other hand, for a technical analyst, if the data changes every day and I'm taking a look at the daily chart last Friday was pretty good, but in the matter of 5 days it has fallen 7-8%, your view will change. And that's why technical analysts or analysis tends to be more towards short-term trading. So I can use the word, I can include the word, is more trading oriented, and fundamental analysis is more investment oriented by nature of the frequency of the data. The third point is something that I think we have discussed in my previous video, wherein a technical analyst, a technical trader can essentially analyze any market, any asset class. He doesn't have to know or understand or learn anything different. To trade the equity market, to analyze the equity market, whatever degree of understanding you need as a technical analyst, you can implement the same understanding on the charts of commodities or currencies and whatsoever. But when it comes to fundamental analysis, it is limited. I would use the word limited. To be a very good fundamental analyst, to do very good company analysis of a particular sector, that sector requires a certain degree of understanding. A banking analyst needs a certain bent of mind to understand those numbers. For an FMCG, for a telecom, for a cement, they are slightly different, at times very different. And when you spend years analyzing a certain sector, you become an expert at it. You become really, really good at it. So the degree of concentration and focus for a fundamental analysis is more towards that particular sector and limited. And even if you think from an asset class point of view, it's very difficult to fundamentally figure out what's happening in cryptos. And the fundamentals of commodities like gold and crude, and the fundamentals of, let's say, currency like the Swiss franc or the yen or the euro. So it is limited. For a fundamental analyst, it's not that easy to be analyzing using fundamentals all different asset classes. On the other hand, for a technical analyst, it's just charts. Here are the three main pointers that I've jotted right in front of you over here, which tells us very clearly that they are two very distinct, separate fields. There are two paths. What we are trying to do is analyze and figure out, is it a good price to buy or not? One path is that of price. The other path is that of the company. One path is that of a stock price which changes frequently. The other part is that of company valuation, which do not change that frequently. So this part requires time. That's why investment. And the technical part is more about short-term price behavior. And that's why trading. Of course, a strength of technical analysis, you can trade any asset classes, and the fundamental analysis will have a certain degree of concentrated focus on a particular asset class. So these are the key differences. Do let me know what are your thoughts about it, and if there are any other points that I've missed out, I'll love to hear from you. Till then, take care of yourselves. Trade well.